Hello traders, welcome to Premium Structure Trading. This is the first video series that I'll be producing over the next few coming weeks. In this video series, I just wanna talk about the structure of the market, and in this video specifically, I want to feature a bonus section whereby I will be showing you my stop loss technique that I use to defeat the market. That helps me to swallow stop loss hunts very smoothly, and I believe that you will learn a lot from what I'm going to be producing over the next few coming weeks. So today I want to talk about I want us to do our analysis on the CAD JPY, because I've seen some very interesting structure that this pair has made. I've been watching this pair for some time now, so I've actually got to catch this nice structure that I'll be showing you right here. So just to tell you in short what's happening in this pair, is that this pair is showing signs of reversing. You can look here with me. This pair has been in a serious uptrend, so I'm seeing some reversal structure that's taking place in this area. That's why I want to talk about this pair today. Before I can continue, let me just pull my chart away and get a clean space. I want us to talk about an uptrend and a downtrend examples. So I'll start with the structure of an uptrend. So for an uptrend, we need to see the market doing something like this. And the other thing is we need to see the market breaking structure. We need to see the market breaking some levels whereby it made some significant turnaround. So I say that because the market, when it's moving in an uptrend, it should make an impulse move to the upside and then a pullback, and then make another impulse move to the upside, which breaks this previous level that we refer to as resistance. So the market must break these resistance levels that it keeps on making on its way to the upside. And then for a downtrend example, it should be something like this. I really want to apologize if you feel like I'm moving fast, so please just pause and rewind the video so that you can clearly understand what is it that I'm on about. So in a downtrend, we want to see the market breaking support levels that it keeps on creating. So we want to see the market breaking these levels here for us to conclude that the market is in a downtrend. So for me to conclude personally that the market is in an uptrend or a downtrend, I would like to see the market breaking two levels. So if I see this one being broken, I'll wait for the market to make a move to the downside and break this level here again. So if I can just see two support levels being broken, for me I will conclude that the market is in a downtrend. And the same on the opposite side, if I see the market breaking two resistance levels, this first one here and the second one here, for me I'll conclude that the market is in an uptrend. So now let's talk about a reversal. So for a reversal, we need to see the market doing something like this. So let's say we are in an uptrend. We need to see the market doing something like this, moving downwards and breaking this level here and coming back to this level. Well, the market can come back to this level or this level. As long as this market doesn't break this level right here, and it manages to move and break this level again here, I will conclude that the market has actually reversed trend. So those are the two conditions that I wait for. And as you can see, like I said, I wait for the market to break two support levels when it's in an uptrend, number one, and the second level here. Then I will conclude that the market is in a downtrend, or the market has made a reversal structure. So what I wait for after these conditions have been met, I wait for the market to either pull back, to actually make a pullback to this previous level here. And at this point, that's where I look for my selling opportunities, because in a downtrend, as you know, we only want to be shorting the market. We want to be selling the market. You do not want to find yourself buying in a downtrend, because you might actually incur more losses than you will if you were selling them. So if it happens that the market doesn't reverse here at this point, but it continues to go up, I will take a loss at this point and then try again to short the market at this point here, and I believe according to the way I've backtested my strategy, this is usually what happens. If I fail to capitalize on the trade here, I normally wait for another pullback, and then when the market gets here, I'll take another short position, and most of the times I get to win this position to the downside, whereby I can hold it for longer. And even if when the pullback takes place from this point up until this level here, I will not be worried about this pullback, because my entry will be up here, so I will not be stressed that the market will take me out. So in the CAD yen pair, the reason I am interested in trading this pair at this point is because this is what has actually happened. All this that I was discussing right now is actually what is taking place right now on this pair. So let's move to the real chart example, and let's discuss exactly this on the real chart examples. So let's move down. I'm moving down. Before I can zoom in, let's see what the CAD yen has been doing. As you can see, this pair has been in a massive uptrend, as you can see here, and now it has done what I've been discussing earlier. Let me get a pen. If you can look here with me, you can see that the market has been coming all the way up, made a pullback, then went all the way up and made a pullback. Now look at what the market does. For us to conclude that this market will continue in an uptrend is for the market to break this level here. What the market actually does is it makes a move to the upside but fails to break this resistance level here, and the market moves down. It tries to move to the upside again, but it fails again to break this level here, and the market actually continues moving heavily to the downside, breaking this previous level here. So now if we can zoom in, like I said previously, I look for two levels for me to conclude that this is a reversal. So what I'm actually going to be doing, since all my requirements for the reversal have been met, I'm actually looking to take a short position in this area here. And again, for me guys, I have specific rules that allow me to take a position at these levels. I don't just take a position after looking at market structure. I also have some candlestick patterns that I look for, which I discuss very deeply in my mentorship program in our trading course at www.premiumstructuretrading.com. You can look it up if you are interested in taking that course. So in this area, I also have my rules that have been met. So this is where I'll be taking my short positions. And by so saying, that's where I conclude my lesson on market structure. So I will get into the bonus feature of this video. Shout out to you if you made it up to this moment of the video. So I will show you my stop loss technique that I use to make sure that I do not get caught if ever the market decides to do some stop loss hunting. So what I do for me to set the stop loss the professional way, what I use is the ATR indicator, average true range. If you can look down here with me, you can see that the ATR indicator for me is already on my charts. So what I do is I look at the last high that the market has made, the previous high. So it is this price here. From that price, I look at the reading on my ATR indicator. So I'll look using the current price action. So when I hover around this candle here, my ATR reading says 58, which I will round off to 60 pips. So what I usually do is I put on my position tool, and then from that previous high, so from where price action is right now, from this point here up until this point here, the last high, the difference in pips is 28 pips. So I will take the 28 pips plus the 60 that we saw on the ATR reading. So 28 plus 60 will be 88 pips. So my stop loss will actually be 88 pips on this trade. And then for my first position, for my first targets, I will take my first profit on 1-to-1 risk to reward. And then for my second position, I'm gonna hold it for long. I'm gonna be holding this position up until this level here, which is the 97.210 level. So let's see if the market does reach that point there. I will keep you updated with this trade in the next video lesson, and I'll also show you my take profit techniques in the next video lesson as the bonus feature of the video. So do stay tuned. If you like what you have seen and learned in this video, please click the subscribe button so that you are notified when we come up with the next video lesson.